Hello everyone, welcome to my channel. My name is Shriyari and I'm very excited to start this journey. This is my first video in YouTube and we will talk about what are the basics of stock market and how to invest in stock market. If you are a beginner or someone who always felt stock market is confusing, difficulty or it's a gambling, this channel is for you. Let's begin with what is stock market. Stock market is a place where shares of the company are bought and sold. When a company needs money in order to grow its business, it divides its ownership into a small parts called as the shares. When we buy these shares, we become the owner of that company. Stock market is not a place where we become rich overnight. It is a place where money grows along with time. Now, let us understand what is IPO. IPO means initial public offering. When a company wants to grow bigger, instead of taking loan, it decides to take money from the public. This process is called as IPO. For the first time, company gives shares to the public. When the people subscribe the shares of that company, they become the small owners of that company. This is called as IPO. After the IPO, the shares of the company are listed on the stock exchange. Anyone can buy or sell these shares in the market. This process is called as initial public offering. Now, you might be wondering, how do people make profits in the stock market? There are mainly two ways in the stock market. Number one is trading and number two is investing. Let us understand the difference between trading and investing. Trading is where you buy and sell shares in a short term to make quick profit, or you might buy and sell shares on the same day, which is called as intraday trading. Trading might be seem exciting, but it is very risky because the prices of the shares will be changing for every second. On the other hand, investing is where you buy the shares of a good companies and hold it for longer period, like for months or for years. Investing is less risky compared to trading. The main idea of investing is that the company will grow in a long run and along with it the money will also grow in the long run. The main rule to remember in investing is that the patience is the key to win. Now, let us understand what is SEBI. SEBI means Securities and Exchange Board of India. It was established on 12th April 1988 and was given statutory power in the year 30th January 1992. The main job of SEBI is to protect investors from unfair trade practices. There are mainly two stock exchanges, namely NSE and BSE. NSE stands for National Stock Exchange and BSE stands for Bombay Stock Exchange. These two stock exchanges make sure that the shares are visible to everyone and makes easy to investors to buy and sell those shares. Without SEBI and stock exchanges, trading would be risky. These stock exchanges makes investors to feel confident and trustworthy. Let us see how shares actually help your money to grow. There are mainly two ways. One is price appreciation and other is dividends. What is price appreciation? Price appreciation means buying at lower price and selling them at an higher price. In simple words, for example, if you buy a share at rupees 100 and sell them at rupees 120, the profit you earned is rupees 20. This is called as price appreciation. And dividends means a small profits are divided by the company to its shareholders. This dividends is shared to only those public who hold only to the public who hold shares for a longer period in a good companies. This is called as dividend and this is called as price appreciation. These are the mainly two ways in which we can make money. Now, let us understand the important concept called index. Index represents the overall performance of an company. For example, in India, Sensex represents the top 30 company listed on BSE, whereas Nifty represents the top 50 companies listed on NSE. When people say Sensex is up and Nifty is down, that means big companies are up or going down. This represents the overall performance of a company. So, as a beginner, learning this index is very important. You might be often hearing about the words called bulls and bears. Bull market means uptrend. The bull markets are raising the prices up, just like the bull attacking by its horns and pushing the prices up. This is called as the bull market. Whereas the bearish market is like the prices are going down, just like the bears are attacking by their paws and swiping the market down. This is called as bulls and bears. Bulls are often called as optimistic market and bears are often called as the pessimistic market. Now let's talk about how to open demat and trading account. Firstly, visit your bank branch or their online portals. Many major banks like SBI, HDFC, ICICI Bank offer demat account. Second, fill the demat account form. It usually contains name, address, phone number. Next, you need to do the KYC documents. Usually the KYC document contains PAN card, Aadhaar or address, many things. Once verified, your demat account is ready. Along with it, you need to open a trading account with the same banks makes it easier. Ask for a trading account linked to your demat account. Fill the trading account form. Usually it is combined with demat application if done online. Once your bank activates it, you can now buy and sell shares using your bank's trading platform. That's it. This is the process. Now you are ready. You can start investing safely. So this was simple introduction to stock market. I hope you understood and this video was a bit informative. And thank you. In the coming videos, we're gonna learn more about the stock market. Thank you.